What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is August 14th of 2019. Well, folks, I hope you all are having a great day wherever you are, and in today's video, we're going to be diving into a few different things, starting off by taking a look at cryptocurrency markets, talking about the third significant point of resistance that we've hit on this kind of sideways trend for Bitcoin, and where I'm looking to average in next. The other thing as well that we're going to be talking about is XRP getting railed as a potential security. I'm going to be giving my thoughts on XRP in that case, as well as the whole Ripple community. And last but not least as well, taking a look through traditional markets and talking about through the numbers why we're seeing outflows into the United States and into hedging assets and out of a lot of weakening economies in the EU as well as Asian markets. So we've got lots of things to discuss, guys. Let's go ahead and jump right into it. So taking a look here over the last 24 hours, not many cryptocurrencies in the green. Most are overwhelmingly in the red. Overwhelmingly, I think I made a new word today. Overwhelmingly in the red. And we can see here, this is obviously due to the fact that Bitcoin's down around 5% here over the last few hours. And I will say, a lot of altcoins are actually outpacing Bitcoin in the sense that they're not getting, they're not outpacing it to the downside. They're actually able to hold above Bitcoin here. So even though we don't have many players in the green, we do have some altcoins that are losing out less to Bitcoin. In fact, I'd say the vast majority here. If we take a look at the list, Bitcoin's really down towards the bottom of this list. But the thing here is that we're not really seeing any kind of altcoin cycle, guys. This doesn't mean that this is a time to get bullish on altcoins. If they're going down, they should be going up as a contrary to Bitcoin going down. That's what we see during altcoin cycles. So again, just to take that note. And again, this is going to play in the sense of what we talked about with Bitcoin. In the overall market cap, we didn't get a clear kind of steady line of resistance like we do on Bitcoin. Obviously, Bitcoin's been the market leader, but we can see here that we set a third higher low here in the sense of the corrective period that we've had in cryptocurrencies, and we'll take a look at Bitcoin and really kind of shape that up. Along with that as well, we hit 70% market dominance. It doesn't say it here exactly on the coin market cap chart because it's a line chart, but we did hit 70% on the market dominance for Bitcoin, and ever since then we've actually been declining. We're actually about down 2.5% from those highs. So again, a very important thing to take note of as we take a look here in the sense of overall price for Bitcoin. Now, we talked for the last few days, again, I'm not trying to sound like a Nostradamus or I call it the top and everything, but we did say to keep an eye out here if we could not get a close above 1200, that this was going to be another point of resistance and that we're going to have to wait for a lower corrective period. And, you know, when you're talking about these kind of periods, guys, when you have it very clear like this, where obviously if it's not closing above there, it's probably going to go down to a support range. I mean, we have, for example, the idea that Bitcoin is going to go in the next day or two down another few $100 and go down to 10,000. And from 12,000, it's a $2,000 discount on Bitcoin. That's a pretty good little, you know, in my opinion, if you're looking to average in this case, I see this personally as a steal. Whether or not you guys see that in the same boat, you got to determine it for yourself. But getting it below the moving averages like we had over here, and still being able to maintain that line of support gives me the confidence that price will rebound, but that this is an opportunity where I can go long in this case. And not to mention a much bigger discount as well from the relative peak this year. So I like this. I like the fact that there's not any crazy sell side volume. It's just as equal, if not less than the buy side volume we had on a few of these peak days over here. So not fretting over it. It just seems like we're kind of in a no trend scenario right now. But in this no trend scenario, we're able to get Bitcoin $2,000 cheaper than where it was just a few days ago. So that's what excites me. So to let you all know, I did average in around 10,800 the other day, just yesterday. I was close to the bottom yesterday, but, you know, again, even as Bitcoin declines a little bit, guys, I don't worry about it too much because I don't like, you know, toss all my cash all at once and stuff. When I make average in sometimes if it's really cheap and I don't think I'm going to average in anymore, sometimes I will. If it's been like a really stark decline, like the 35 to 40% corrections, I just add those in. But if we're in a no trend scenario like this where it's kind of pushing sideways, what I'll do is I'll be like, you know, I do think it's going to 10,000, but just in case I'm wrong, I'm going to add in 50% of my cash position right now that I have available in order to average in, or that I feel comfortable adding into Bitcoin in total. And then if it continues to decline, if it goes down here to 10,000, I'll likely add more. Or maybe I'll get some exposure to some of my altcoins that I like. Again, I wait, and, you know, I don't jump the gun too quick. I'm not too eager, but I also don't miss the opportunity to where if, you know, this starts to rebound, I'm not going to completely miss out, you know. So that's the kind of thesis there. So anyways, hope I made that clear. In the sense of overall, markets, guys, if we take a look at the list of, we have to click on the assets button here, we can see the overall market, as I mentioned, is quite red right now. But I do like to see that some altcoins are not losing out to Bitcoin. I was really getting fearful as we approached 70% that there'd be a huge flush. And it seems like we've seen most of the downside in this case. I think over the long term, a lot of altcoins won't rebound in this next cycle, but we'll have to see. Okay, so XRP, this is one of the headlines will refer to as Ripple, and I honestly wish that was the case. Ripple's much easier. I don't get why XRP needs to be called XRP. Anyways, I know there's some of you out there who are fans of XRP and are fans of Ripple, and there's this lawsuit that's going on right now, this multitude of suits that are going on right now against XRP and Ripple supposedly conducting a securities offering or a crypto security offering with XRP. Now, this is not something new. This has been brewing for some time. I would assume that the number of cases or the participants engaged in these cases has probably only grown as time progresses because XRP hasn't been going up probably as much of them expected. And this has been something that's debated for a long time. Was XRP a security? It's the same arguments probably that are made against Ethereum and a lot of other projects out there. But I want to make something very clear here. I have no doubt that there will be some decent challenges against something like XRP in the court system. At the end of the day, though, I think XRP's gonna be, given all, pat on the shoulder, or they're gonna be given a fair warning, just like you get off this time in this case. I really do believe that they're gonna walk away scot-free in this case. Now, whether or not I think it's a securities offering or not doesn't really matter. What I have to say is that I see these suits coming out in 2018 and 2019, and they're coming out in this idea of saying, oh, we were misled. We were misled about XRP, and we were told this and that. And look, I have no doubt they might have violated some marketing, things of that sort, that might deem it a security in the sense of promoting it as a profitable venture or something like that. But the fact of the matter is, guys, is that if you invest in these things, they're highly speculative. Don't try to blame it on XRP and Ripple. And look, I gotta be fair with you all. I'm not the biggest fan of XRP. I revisited XRP before. I did a video on it, like I think a year ago. And I've talked about XRP and Ripple Labs and stuff, and I don't really have much heartfelt feelings, but I do really dislike the way that, well, let's just say, for example, those large cyclical cycles that you see in XRP, they're not natural. Okay, I'm just going to go ahead and put it like that. And that there's, let's say a market making firm that, is a 3-letter market making firm that usually conducts those. And what their objective is to basically prop up the price and then dump on retail investors to raise capital. That's at least what they say. So I personally don't like that. I don't mind trading and speculating on it, and I don't mind if you want to do the same. And if you really like Ripple's technology and you're fine with them dumping hundreds of millions on investors, hey, there's ICOs that have probably done worse. Anyways, that's my feelings on it. And I honestly don't think, whatever comes out of this case, that Ripple Labs is really responsible. I know, but at the same time, there's a lot of things that people don't know about in the sense of how its price gets manipulated in that case. That's what I would say, that people should have known more about. That's what my complaint would be, rather than how it was marketed. They at least have a functioning product and stuff in that case. So I don't think they're really so much misleading people on what XRP is and what Ripple is. They know you should know it's not equity. I would hope that for sure. Anyways, so now I want to spend some time to take a look over futures and talk about traditional equities. Yesterday was really interesting. When we did our update, it was looking as if futures were going to open up down about 0.1, 0.3%, slightly down day, kind of no trend scenario in that case for equity markets. And it was, looking like it might have been a normal day and stuff, pressing towards support. But then out of nowhere, we got news that the trade war was supposedly progressing and that the tariffs were going to be pushed off, and stocks popped up about 1.5 to 2%, in the United States, but also we saw some green across the board, as that gave us more confidence. But the thing is, it's so interesting. We see now that over the last few hours, all of those gains have completely festered down. And, I'm not trying to say this and just focus on the negative side of things. I mean, obviously, when you see green price action like that, that's always good. And, if you're long on that, that's awesome. But the fact of the matter is that with this fade off in the last few hours towards that kind of move, I think it speaks towards the current environment right now, the uncertainty that's going on, the fact that, we hear this news that tariffs are being pushed off and the trade war is going well. And in reality, Who knows? The tariffs could come back next week. In fact, the tariffs might come back even stronger. We might get more tariffs on more goods and services. And there might be more macro factors brewing. In China, for example, as we've seen the leaked videos of them bringing troops and vehicles across the bridge over to Hong Kong, or preparing it. Who knows? Maybe they try to silence protests and things get even more aggravated. And, we still might not reach a resolution to Brexit, and we might not be able to fix the other dozens of problems, the currency crises, the contagion that's going on right now between emerging market economies. Who knows? Right? And I think that's why the market's coming back down. And I don't think it's just this trade war. I think it's much, much more. There's so much elements brewing right now. And I think it's a materialization of that. Now, the thing to take away is that even though the United States markets look bad today, they're down 1.5% on average, we're still seeing other countries have larger exits. Now, bear in mind, you sometimes have smaller markets, some of which have actually gone up probably more than U.S. markets in some cases, some of the emerging economies. And they're obviously going to have harder corrections. But a lot of them are well-established economies. And a lot of them are European markets and other different emerging market economies, from Southeast Asia to areas in South America. And we can see here, for example, South Africa right here as well. Country facing a currency crisis. Number one on the downside today. Germany, the DAX, down almost 2.25%. Japan, another weak link that we've talked about in the sense of the kind of game of monetary policy and central banks. Italy as well. Big domino here that a lot of people have been looking for in European markets. Russia as well, down 2.2%. Sweden, down 2.1%. Another German index, down 2%. And you can see the broader Eurozone pretty much down 2% in this case. So we can see here, I mean, there's a lot of other markets here, and I don't want to, again, exclude the US. It's down today. It's not doing well. But what we're seeing is that even though US markets are not doing fantastic, that we've been pretty much sideways in nature since 2018. We've had some higher levels since this range back in 2018. We've also had some lower levels. But all in all, we're really kind of pushing sideways now, not so much an uptrend. The United States market is still leading. So we can see across the board, there's a lot of other indices. I mean, we don't usually take a look at this, so I thought I'd go ahead and share some of these indices with you all. Take a look at the DAX here. German index. Looks like a very clear head and shoulder pattern, right? Haven't set new highs since back here in 2017. Pretty crazy stuff. We can take a look at all these other ones right here. For example, we can take a look at Russia right here. Should be able to take a look at the RTS. So we can see right here, RTSI. Take a look at Russia, guys. I mean, looks like we've been in a general uptrend, but really in a general downtrend all the way through here, through 2011 to 2015. Big reason? Ruble. Currency crisis. It had a very huge devaluation of its currency. We have so many different indices. We can take a look at the Euro Stoxx 50 in this case. So go ahead here, get a good broad image of what's going on in the Eurozone. Take a look at the Eurozone, guys. I mean, this looks like a chart for disaster here. And it's not because I dislike the Eurozone. I love the Eurozone, guys. I love, not just the Eurozone, I love Europe in general. European people are great people, believe me. No, but I love visiting so many areas in Europe, from Ireland to Switzerland to Greece and the Netherlands, and there's so many wonderful spots, and there's still some that I mean to visit. But let me just take a look at this, guys. This looks like a clear wedge building right here, lowering highs, rising lows here, right? This just looks like it's ready to fall off a cliff here and go back down to this low range down here that we haven't seen since back here during 2008, 2009, as well as 2012, when there was the fears of Greece and other European areas, especially the PIGS acronym, Portugal, Ireland, Italy, Greece, and Spain. Those were really the five major dominoes that were looking to possibly fall. And the European banking system had to step in, and really help try to prevent that. And keep the contagion from spreading in that case. So again, we can take a look through so many indexes, guys, and indicators, but I think you get my point. There's a really big misconception in equities, and it's something that I think we've just come accustomed to in the United States. It's kind of a comfort that we have, and that is that you can just simply invest in equities and you're going to be okay. It doesn't matter if you bought at the peak of the market, because in the long term, the stock market goes up, right? Well, that hasn't been the case for European equities over the last 2 decades. If you bought anywhere during this uptrend during the 90s, you're down on your luck. If you bought anywhere in the upper phase here between 2005 to 2007 during the previous cycle, you're down on your money. So my point here is that nothing is ever guaranteed in this world. If you take away a lesson today, guys, this is why it's important to understand finance, to be a macro trader, to be insightful in these things, whether or not you're as crazy about it and cuckoo and crazy about it as I am. I'd recommend you guys spend a little bit of time to understand where the fundamentals are shifting, where the trends are shifting. And this is why I don't mind getting some exposure to what appears to be risky assets like cryptocurrencies or gold or silver. It's because I know that at this time, equities are overextended and that the odds are in my favor. And whether or not it moves up this week, month from now, year from now, I'm better exposed to these assets personally, in my opinion. So that's my major lesson today, guys. Don't take anything for granted. Also, don't believe that the world is going to be predictable and give you a yellow brick road to follow down. You have to build your own path and find the investment strategies that work best for you. Anyways, that's it for the video, everyone. Hope you all are having a great day wherever you are. Thank you for joining me in this ramble as always, and I'll see you guys in the next video. Stay tuned.